Good evening, good afternoon, bonsoir, buenas noches to investors in North and South America. 我係國際 investor， 用下手手嘅超貴早晨 Good morning to investors in Asia. Buenas noches, good night to investors in Europe and Africa. I'm Daniel Yu speaking from Hong Kong. It's 4th December here and 3rd December in Wall Street. This week, I have 3 main points to talk about. Number 1, Santa Claus rally. Number 2, Goldilocks Effect. Number 3, new moon generates a new era. And stock recommendations will be of high growth stocks. Subscribe, like, and share. Remember to click the bell, please. Watch our playlist again so as to grasp the continuous trend of the market and refresh your mind. As December comes, the focus of the market will be on retail sales between Thanksgiving Day and Christmas. The term Santa Claus rally is taken out again as a hot topic. Mind that the Santa Claus rally does not mean it will rise the whole December. It is defined as the last 5 trading days of December, which cover Christmas and the 2 trading days after New Year. There are a lot of unwritten laws in the market, such as people said in October there will be a crash, but after saying Apple will drop in September because of product introduction, it means it will rebound in October. So what is October? Will it rise or fall? There's another saying of sell in May and go away, but people forgot the second half is the comeback in September. The whole saying is sell in May, come back in September. So comeback means it will rise, and how about product introduction of Apple? Will the market rise or fall in September? The Santa Claus rally was defined in 1972 by Yale Hirsch as a dot almanac that is part of a stock calendar to describe the situation of the market as the winter or summer solstice in Stonehenge. So other markets also follow this system and describe it as window dressing by year end to make account books look more lovely. Even commodity markets, bonds, currencies, and precious metal market follow the practice and call it window dressing. In 2015, I precisely forecast the changing point of the gold market up to year, month, day, hour, minute, second, and gold market rose up till now. We can see from the statistic of S&P and Dow Jones, or even investors can plot other charts to show it is believable, that the symptom is up to a percentage of 79.2%. Some investors are very clever. It is quite accurate from 1972 to 2022, altogether 50 years, really up to that percentage. So what happens to the rest 20%? Who can guarantee this year is not within that 20%? Such traditional sayings like sell in May and go away is not a Bible. The market is high and is going to adjust. Any slight wind can bring a quicker and deeper adjustment. This year, I would recommend some Santa Claus stocks which can jump off this cycle. But before that, please study my electronic handouts thoroughly together with the series of 14 teaching videos with live examples and certain texts specially designed for self-studying and also philosophical questions to think about as homework. Any sponsor for our seminar daily report and videos are appreciated with gratitude. Please contact Professor Vitali for details. When market sentiment is optimistic, there are a lot of positive terms like Goldilocks Effect just coming after the Santa Claus rally and window dressing, replacing the pessimistic terms of black swan and grey hyena. The Goldilocks Effect is a cognitive science in relation to development psychology, depicting a state of just the right amount, neither too great nor too small, in case of coming hazardous situations of preparing porridges and 3 bears in the fairy tale of Robert Southey. Now it is used to describe the current situation of economic expansion, but would not lead to inflation, when everyone is waiting for soft landing and growth must come, but at the same time not so high a growth to keep up inflation. That rate hike cycle can be ended soon and rate cut cycle can come earlier. The page last Wednesday showed economic activities slowed down, but tourism was healthy. When people were worrying about recession, the GDP showed a great rise of 5.2%. It write off worries of recession, but would it reignite uncontrollable with inflation when PCE rose from 2.5 to 2.8%? No. For the market expectation is 2.9%, it is lower now. The PCE annual dropped from 3.4% to 3.0%, and core PCE from 3.7% to 3.5%. Market was in a cycle of changing from rate high to rate cut. On October 2nd, when Head and Shoulders is formed, the astronomical formula is that Jupiter conjunct with the Moon. These two planets are protecting the Earth from being crashed by meteors, so the US stock market rebounded up to form a second right shoulder because of protection. The overriding meteor shower peaked on October 22nd and Saturn conjunction with the Moon on October 24th. The Nasdaq reached bottom on October 26th and DJIA and S&P on October 27th. December 13th is the decision date of FOMC meeting, which is the new moon of visibility of 1%, and on December 27th, full moon is 100%, which is known as cold moon or long light moon. This new moon will start a new cycle at the peak of Santa Claus Valley. This means the misty situation will be wiped off and brilliant days are coming. For stock recommendations, in our daily report, the US Stock Express, there is a column known as Northeast Southwest is News. News is one of the most important factors that can affect the rise and fall of the stock market. Besides chart analysis, the focus should not be placed upon how twisted or unexpected the outcome will be, but on how it affects the financial market. After watching the mutiny of Open AI and Microsoft, how should we react to such a situation when a lot of people said the market is overbought and ready to adjust? I've already explained why we should buy the CRM in the video of last week, which is video 59 at 2023-1127, and it jumped up at once. Also, the myth of Apple, which will fall every September. I have already pointed out the best buy level is $167, and it was quite near the bottom. And profit-taking level should be at $193, for that is the level of total market value of $3 trillion, and all investors to take half of the profit, but new investors still can enter the market at this level. Since the three major indices are near their resistance and adjustment may come at any time, no need to chase, better buy the following high growth stocks at low, for it will have more room to rise. Dollar General, DG, is one of the most famous retail stores which most products are fixed at a price of $5. In the UK, it is the pound store. This store operates nearly 19,500 stores in all 50 states. The firm is also expanding internationally, launching its first Me Super Dollar store in Mexico. For the dividend history, we can note it as steady growth year by year since 2018. Therefore, the dividend you can earn is every year more and more. Better believe it than whatsoever sayings. Next one is Dick's Sporting Goods, DKS. It is the largest sports and leisure retailer in America. It operates 869 stores in 47 states and surely will be benefited by holidays. From the 3-year chart, it just popped up the 250 SMA and formed a pullback. Much room for rising and better than chasing high. It also has a steady growth in dividends in the past 6 years. For Intel, INTC, the earnings per share is in June is $546.4, and Intel Core processor are still developing. In the 3-year chart, we can see it has risen from the low and has much room for rising. For dividends, it has been growing steadily for the past 6 years. The yield is 3.31%, higher than average of US stocks and Ps. So worthwhile to buy even if there's no Santa Claus Valley. For a trend of semiconductors will not end so soon. MasterCard MA will soon be accepted by China, and after Joe Biden meets presidency in San Francisco, it will be a project of long-term development. Dividend has been steadily growing in the past years with the exception of 2022, but landing of China surely is an inspiration for Christmas traveling and can be bought at the level of 100 and SMA, which is $398. For further details, please refer to my daily report, the US Stock Express, and give a free subscription so that you can get the latest news at once on every trading day. S&P is reorganizing the component of stocks index effective from December 1st. That is, they found a lot of important stocks or those leading the market have not been absorbed, and found a lot of current members are not active enough. They have just a comprehensive reorganization, which means a lot of rising stocks outside the components will be accepted to reflect the current situation, and those that fell behind will be kicked off. This means the index will be more energetic henceforward, but I have already said should finish buying before October several months ago, for the coming year is so promising. Finally, please keep an eye on the new pandemic of China. So again, subscribe, like, and share. So you know what? I'll finish it. I'll do bye-bye. See you next week.